I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to the show, Hilliard.
Nice to be here to be interviewed.
People are talking about the Bank of Canada with an pre-announced rate hike. How bad is it, and will it have a major impact?
I think, first of all, the surprise element. So a lot of people were expecting another rate hike. They had hiked in, I think, June or July, 25 basis points, and then today they announced the second one. But the difference is they did something that's very unusual today. They normally have a speech or two, or they send some deputy governors out and give warnings and things like that, and this time they didn't. So although people knew there was probably another rate hike coming because of the GDP announcement a week ago, they didn't expect it so soon. And so this is actually unusual. And if you go back over the years, I didn't do it, somebody else did, they said the number of times they've actually done this is very rare. So they must feel quite strongly that they need to raise rate. And what they're operating on is the idea that the economy has no slack left in it. So there's this thing called the output gap, which is kind of economist jargon, but basically means the economy is operating at full strength, and so any additional demand that's put into the economy can't be met by additional supply. So all that happens is there's a shortage of supply and an excess of demand, and inflation comes back. So they're worried about inflation. So, some of us are skeptical about the way they measure the output gap. There's also some problem with the way they measure GDP, and of course the big one that nobody's talking about is the housing bubble and what this will have. What kind of impact these interest rate hikes will have on the possibility of turning what looks like it kind of a leveling off of housing prices might turn it into more of a hard landing or a crash rather than just what everybody wants to call a soft landing. So there's a lot. I mean, it's just 25 basis points doesn't sound like much, but there's actually quite a bit going on here underneath behind the scenes.
Well, when it doesn't sound like a lot, would there be a big reaction in the markets on it? I noticed the Canadian dollar popped up more than a cent.
Yes, no, there's a big reaction in the market. So the Canadian dollar jumped, and it's already gone up from like the low 70s to the low 80s over the last year or so. So this is a huge increase in the exchange rate of the Canadian dollar against the U.S. dollar. And that's one of the biggest impacts on the economy that there is. It's like raising interest rates. So with the dollar going up, the Canadian dollar going up that much against the U.S. Dollar, it's like raising the costs of all the companies that export, and it's also like raising interest rates. So, and then the other impact is the Government of Canada 5-year bond rate, which is the main floor under mortgage rates, has gone up from something like 50 basis points a couple of years ago. Last time we talked, you and I, a couple of weeks ago, it was about 1.5%. Now it's almost 1.7%. So that's a huge reaction as well. And that'll have a big impact on mortgage rates and the problem of whether people can qualify for the mortgage rates. So generally they say in economic theory that mortgage rate increases and decreases instituted by the central bank operate with a big lag, sometimes as much as 6 to 9 months. But in this case, the lags seem to have collapsed into more like 1 or 2 hours. So it's quite a change. And maybe the Bank of Canada wasn't expecting that. I don't know, but
well, we're making a big deal out of the 0.25%. Is this going to make any big difference to a business trying to expand and borrow money, or are rates still reasonable?
Well, I think absolutely, it's only a quarter of a point. And actually, when the oil price collapsed and there was a recession in Alberta, so it would be coming up to 3 years ago, I guess, the central bank cut interest rates by 50 basis points, all in one shot, I think. I think they did it all at once, 50 basis points. So really all these two hikes, June and September, have been reclaiming that ground. So, if you look at it from that point of view, it's not much. But the difference is, and even just in the 3 years since then, house prices have gone up a lot, although they've come down a bit in Toronto from the peak in April of this year. And debt levels have gone up even more. I mean, mortgage debt and household debt is going up at 5, 6, 7, 8% a year, and depending on the household, depending on the situation. So, and corporate sector debt is going up at a similar rate. So the private sector debt in Canada is already, since the last time they cut interest rates, is already up something like 15 or 20%. And so what that means is any little increase in interest rates, which previously could have been probably ignored or brushed off without much trouble, would now have a much bigger impact. Now, if people have borrowed the money recently, already one of the banks, and I'm sure they'll all follow, have raised their interest rates on mortgages by a quarter of a point, or the prime rate by a quarter of a point. Actually, I think it's the prime rate. I don't think they've announced the mortgage rates, but they will go up too as well, I'm sure. It only affects people that are applying for a mortgage now. But all of the mortgages in Canada come up for renewal, or almost all of them come up for renewal quite frequently, 5 years. And some of them are variable rate mortgages. I think a fairly substantial amount of the almost $1.5 trillion in mortgage debt is on a floating rate. So the impacts on these monetary policy changes are more rapid now than they used to be back when the debts were lower and people didn't use floating rates. So I remember when interest rates are 14%, nobody used floating rates. We should have used floating rates then, because the rates were going down from that point. But we thought they were going up, so we all took fixed rates. But nowadays, people, because rates are so low, I guess they take the variable rate.
We'll have more with Hilliard MacBeth right after the break.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with Hilliard MacBeth. Hilliard, another survey came out that says 47% of Canadians live paycheck to paycheck. So while maybe 0.25% doesn't sound like a big hike, for those kind of people, is this bad news?
I think it could be. There's about 12 million. There's about 12 million households in Canada. 36 million people, roughly 3 people per household on average. And Bank of Canada and CMHC have put out really nice graphs that show that about as much as 20% of those households are heavily in debt. The measure they use is 450% of income. I think the people that live paycheck to paycheck is probably even bigger than that. But when you look at 20% of 12, that's 2 million households, let's say, just to round it off. 2 million households with enormous debts, living paycheck to paycheck, and now hopefully they borrowed with fixed rates that'll last for another 5 years, but invariably out of those 2 million households, there's bound to be a few, probably more than a few, whose mortgages are coming up for renewal tomorrow, or maybe they're on a variable rate, or maybe they're borrowing at the payday loan company. I don't know. But I see here the TD and Royal have raised the prime rate to 3.2% so already. And, of course, most people don't get prime. Most people pay higher than prime, especially the heavily indebted households. So rates that were probably between 2 and 3% a couple of years ago are now probably 3.5%, 4%, 4.5% on average. And given, as we said a minute ago, given the much more heavily indebted nature of these households today, their ability to handle those rate increases is much diminished. And even a small increase like this is going to have an impact. Now, what that means is the Bank of Canada must believe that it's very important that they raise rates, because they must be aware of what we're talking about. Although, interestingly enough, economic theory ignores the existence of banks and the existence of of debt and borrowing and all that kind of stuff. They sort of assume it away as if it doesn't exist, but it's the single biggest reality for 2, 3, 4 million households in Canada today, is the amount of money they owe. And even if they can handle the increased interest rates, if they believe that rates are going higher, they may just change their behavior because of that. They may start thinking, well, I better borrow less, or I better pay down some of this loan because rates are going up. And I don't know if that'll happen. It hasn't happened, obviously, for a long time. People have just been borrowing more and more every year. But at some point, either forced to or because they kind of get afraid the rates might go higher, they could change their behavior.
Also, you were saying the way the government said that we had 4.6% economic growth in the first half of the year, or projected for that to continue. What kind of numbers are they using to come up with that growth, and are they realistic? Well,
there's an amazing thing that so and this is one of those esoteric things that it didn't even get mentioned. I'm kind of surprised, but it really didn't get mentioned in the news releases. But the way they calculate GDP is the product. So in other words, all the transactions, and there's a whole bunch of decisions they have to make. For instance, when you buy and sell houses on the secondary market, that isn't included in the GDP, and the increase in the house price isn't included in the inflation rate, believe it or not. But that would be another whole show we could do on that. But on this particular issue, once you get down to all those deciding what transactions to include and exclude, the prices that you record those transactions at are in today's dollars. They're not adjusted for inflation. There's no way they can measure inflation-adjusted dollars of GDP. So what they do is they add them all up, and they call that nominal GDP. But they don't report nominal GDP. Nominal GDP was 2.83%. So how did they get to 4.5% from 2.8%? Well, what happened was, and of course, we've got to fill in one more blank. The Bank of Canada has a special way of measuring inflation that is related to the GDP. So the regular CPI number, which is a positive number, is not the same as what they use for the GDP adjustment. So the GDP adjustment was a negative number. I looked it up just now. It went from 115 down to 115.4 down to 115. So that's in 3 months. So they take that 0.4, they multiply it by 4, which is another whole story of whether they should do that or not, I don't know, to come up with 1.6. Then they take the 2.8 that actually was the GDP number. And because the 1.6 is a negative number, when you subtract the negative number from another number, it actually becomes a positive. And now you're at 4.5. So that's how they got to 4.5 from 2.8. And if that sounds a little sketchy to you, I think it is a little sketchy. Because everybody knows that prices are not going down, they're going up. So how they measured this GDP deflator and why they multiply, 3-month number, which is very volatile, but by 4 to get to an annual number, I don't know. But that's how they got to 4.5. So the economy is not as strong as it sounds when you realize that they got to that number by subtracting a negative number from the real number, which is only 2.8. So therefore, if it's based on a false premise that the economy is that strong and they're ignoring the housing bubble, maybe they're making a mistake raising interest rates. I don't know, but it's quite possible that this is a big mistake raising interest rates because they're ignoring the housing bubble and they're basing it on a strength in the economy that might not be nearly as strong as it gets reported. But the problem with economics is they make all these assumptions, and they have to, in order to make the math work, they have to do a lot of fancy mathematics, very advanced mathematics. And then when they get the numbers at the end, they forget that they made all those assumptions, and they forget that they did all this fancy mathematics, and they believe that it's real. It's kind of like, reminds me of China. Everybody knows that the numbers in China often are just made up. But when you actually get that GDP number, the economy grew by 6%, even though everybody knows that most of the numbers that go into that number were made up by regional people that are under pressure to report a positive number, people start reporting it, and then once it's reported, it becomes gospel, like it's really true. And only a few people actually remind themselves that these numbers may not be accurate. So yeah, based on a GDP number, which was calculated in a very kind of wonky way, they now have raised interest rates twice in the space of less than 4 months.
We'll have more with Hilliard MacBeth right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Hilliard MacBeth. Hilliard, according to the Toronto Dominion Bank, Canadian policymakers have done, quote, a fantastic job on housing. Would you agree with that statement?
No, I'm laughing. I didn't see that. I have, it's such an odd thing to be working as an economist for a Canadian institution like a chartered bank, because those are the best jobs, really. Well, other than the top positions at some of the top universities like University of Toronto or Queen's or UBC, the job prospects for economists are fairly limited. So if you get a job in the Department of Economics at one of the major banks, you've got a really good job, and it pays really well, and then they give you shares in the bank, and the price of the shares keeps going up because they keep raising their dividends and they keep reporting huge profits. $12 billion a year of profit. So it's all good. However, there's one downside, and that is you have to remember that your employer is the biggest lender, or the second biggest lender in Canada, so you better not say anything that is going to, maybe that's not fair, but it sort of strikes me that, and of course I would disagree entirely. I mean, the policymakers, so you've got the Bank of Canada who kept interest rates really low. You've got CMHC that allowed people to borrow money until they changed the rules in December, which is less than 10 months ago. You could get insurance on CMHC loans that were over $1 million, that were for investment purposes only. You didn't have to live in the home. You didn't have to have a credit score. it was just crazy. So I'm not sure what they're referring to, but certainly the original push behind the housing thing started in 2006, or even before that, but it's got really accelerated in 2006 when they allowed 40-year amortization and 0% down payment. They've been scaling it back slightly ever since, but the push that made let the genie out of the bag, out of the kettle, and we've been riding this housing bubble ever since. So I don't know how they could possibly conclude that they've done a great job, unless what they're saying is that they've done a great job moderating the bubble into something that's manageable. But it's way too early to say that they've managed to get out of the bubble into something like a soft landing. And it's extremely unlikely that there is anything such as a soft landing. And you'd have to look back. You'd have to wait a couple of years, then look back on this period and say, did they get us out of this without too much damage? But it's extremely unlikely. As we said a few minutes ago, the debt levels are so much higher. There's almost $1.5 trillion now just in mortgage debt alone. Never mind car loans, credit cards, all that stuff. And the policies and the policymakers and the institutions were the ones that allowed that to happen. So I definitely would not give them a passing grade on that. And unfortunately, getting us out of this difficult situation that we're in will take all of the brains and resources that the various people have, and it's going to be very difficult.
What's the feeling in Alberta when it comes to the federal government's new plans for taxing small business? Well,
I was talking to a doctor, and I think doctors are the people that are most affected by this because the people who have a small business that it actually employs a lot of people are not going to be affected much by this at all. Usually they don't keep a lot of money inside the small corporation that gets the tax breaks that they're talking about. What the finance minister Morneau is targeting, the people that have, like a doctor, they've incorporated their business. Their income from the doctor business goes into the corporation. If they leave the money in the corporation, it gets taxed at the special tax rate that small business attracts. And when they pull it out, in theory, what's supposed to happen is they're supposed to pay a second tax, which makes it equal to the situation that would have happened if they just took the money as a person, like a regular person like you and me, without a corporation. However, the accounting industry being what it is, they've come up with a whole bunch of really creative and somewhat complicated techniques to take that money outside of the corporation that, say, the doctor earns, and sprinkle it. It's one of the ways of doing it is called sprinkling among all the family members, and therefore the tax rate is much, much lower. So he's attacked that, and the doctors feel like they're under attack. The one I talked to today was telling me about how hard it is to make a living as a general practitioner, how long the hours are and how difficult it is. And this is the one thing, because they don't have pensions, they don't have a whole bunch of other things that a regular employee would get. This is the one benefit they had, which actually most of them don't take advantage of, the sprinkling and some of these other more exotic things. And so to remove that, this general practitioner felt very, very strongly and emotionally that this was terrible. But I don't know if the public in general is going to side with the doctors or is going to side with the fairness argument, because the tax department has got an argument about fairness, but they have to be careful that they obviously don't go too far.
Well, it's hard enough now to find a GP, a family doctor. Could this chase family doctors to the States?
Well, this is the way the conversation I had this morning was going. It was sort of like, if they take this away, we work such long hours, and they get paid like $30 a visit, or even less than that. they just had in BC, they just had a 30% reduction in a lot of the fees that's attached to certain activities. So every separate activity a doctor, a lot of them have got different codes and they get paid a different amount of money. So this doctor was saying at the end of the day, some days they only make $300 for probably a 10 or 12 hour day. So that's what, $30 or $25 an hour. And yeah, I mean, if they get pushed too hard, they might decide that either to work fewer hours, take more time off, or to move to a more favorable jurisdiction. Having said that, though, I think most people view doctors as people that earn a lot of money, even though it's not necessarily true in every case. Certainly the specialists do earn very high incomes in a lot of cases, but so I don't know how much sympathy there's going to be among the voting population. But this is a big deal. This is a big deal, and I hope that what happens is that the government backs off the provisions other than the ones that are just out and out blatant tax avoidance, and leave the best part for the GP that's maybe making $300,000 a year.
Well, why don't they go for the housing flips and the money laundering going on in the Vancouver real estate market? That was ignored.
Well, exactly. I mean, at least these people are working to earn the money that they make, and now they're trying to use accounting techniques to pay less tax. But I think you can't compare that to somebody just buying a house, paying no tax on the gain, that hasn't done any work, hasn't reported any income, and is still getting rich. I mean, compare that to a GP that's there for 12 hours a day actually helping people and not getting paid very well for doing it. There's no comparison at all. So they can't crack down on these tax shelters that these corporations are using for working people, and not come down even harder on the people that aren't doing any work at all or just speculating on that's the whole thing about real estate that's so weird, is that so many people have become convinced that you just buy real estate, you sit back, you do nothing, maybe go for coffee and talk to your friends or whatever, and wait for the real estate market to make you rich. And it's just such an odd thing. It's really not something that Canadians in the past, in general, have really embraced. It's Canadians are sort of known for being hardworking and putting in the hours and doing all that, cutting down trees and digging oil, mining stuff out of the ground, pumping oil out of the ground, building stuff. In some parts of the world, I think it's a longer tradition of just owning land and just sitting back and waiting for the riches to roll in, untaxed. But is that what we really do? We don't want to encourage that in Canada. I don't think that's not something we want to encourage. It's crazy.
Well, it's worked so well for the Windsors, who live in a number of palaces across the UK.
But at least in their case, they have to go and open hospitals and bridges and stuff. Can you imagine what that's like? I mean, I think Prince Philip, at the age of 90-something, just recently retired, and he said, "That's my last." I forget what it was.
Ribbon cutting or
ribbon cutting. He said, and he made some comment which I can't remember, but they're kind of like, you got to feel sorry for a guy that's had 60 or 70 years of having to go to these ribbon cuttings, listen to the same similar boring speeches, smiling, shaking hands. I don't know. I think they earned every penny of it, actually, quite frankly.
And you get to be on the money.
Yeah.
Hilliard,
yeah, you get your picture. Well, at least his wife gets her picture on the money. That's right.
Well, apparently his big disappointment is that he's always been known as the Prince Consort, and he really wanted to be known as the King Consort.
Oh, really? Yeah, no, there can only be... Well, pretty soon, one way or another, we're going to have a king, and that's...
or queen.
In my lifetime.
You never know with the line of succession.
All I remember is, I think I was born before Elizabeth was sworn in, but only a very short time before she was sworn in. My whole lifetime There's just been Queen Elizabeth.
Well, she has been the longest reigning monarch in the world.
So when the king comes, it's going to be interesting. I don't know whether it's going to be Charles or somebody else, but it'll be different.
Well,
and they'll be different. And how much does it cost to reprint all that money? Or do they just... No, they don't have to reprint it. Just on the new money, they have to put the new picture on. The old money can stay in circulation.
Yes, and the old in Canada, in fact, anything that's been printed as money is legal tender. Most people don't know when they say his phony's a $3 bill. Canada had $3 and $4 bills. But
and so they would still be legal tender if you could find one.
But I bet you'd get a whole lot more for it than just $3.
I don't think you'd want to spend it as money. I think you'd want to keep it as a collector's item for sure.
well, Picasso used to sign checks for his restaurant bills, and he said some people would actually cash the checks, not realizing they had a signed Picasso.
Yeah, that was a big mistake. Well, I had an uncle who was a prospector in the mining business, and he found several mines, and they would give him shares in these companies, like, you know, when they were like 10 cents a share or 5 cents a share, and most of them didn't work out, but a couple of them were huge, became huge mines, and only he'd hung on to a few of those share certificates a little while longer, but he needed the money and he sold them, and that's just the way people are, I guess.
I have seen prospector cabin walls papered with shares.
Well, I guess that's part of it too, because you don't know which ones, so you have to keep them all, right? And so many of them don't work out that you can understand a prospector who's quite skeptical about that.
Yeah, well, like I said, line the cabin walls with them because they're worthless, except as wallpaper.
Yeah, you might burn them in the stove even.
Hilliard, always fun chatting with you.
Nice to talk to you.
My guest has been Hilliard MacBeth, author of Surviving the Big Canadian Real Estate Crash. And, people are still buying when the bubble bursts. Is all the information in it still valid, or the basics?
Yeah, I went into second printing recently, and I had the opportunity to read it and to find the mistakes. There were about 7 mostly typographical errors. And I was actually pleasantly surprised that it stands up very well. I mean, obviously it came out 2.5 years ago, so some of the predictions are still yet to happen. But certainly all of the information and all of the trends that are identified and the analysis is still very valid, and in fact, I suspect that fairly soon it's about to become very real as well.
Hilliard, thanks again.
Thank you.
My guest has been Hilliard MacBeth. His book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, his website, macbethgroup.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our popular YouTube channel is Talk Digital Network. Questions for the show or our guests can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.